Sprint could become a much more viable player. And you saw the market react to that today when it bid up shares of the stock, really saying that, hey, this single-digit midget may be a multi-digit midget. I don't know. If you look at the stock chart over the course of the last year.
That doesn't even make sense.
A multi-digit midget? Well,
okay.
$11. I don't know. It's not anywhere near there right now. That'd still require another doubling. But what we see from this company is a renewed hope that there could actually be a viable place for it in a business that's principally dominated by Verizon and by AT&T. When SoftBank looks at Sprint, with the cash that SoftBank has, they could make it viable in a lot of ways because Sprint actually does have a lot of assets. They just don't have the cash to expand in a big way from where they are right now. But when you look at the assets they have, one of the first things that they see, one of the reasons that they love Sprint when they look at it, they see 56.4 million subscribers at the end of the last quarter. They see just in the wireless end alone almost $40 billion in wireless assets. And, we think of this as a weak player here, but subscriber growth continues at Sprint, where we see 8% subscriber growth from this company.
I guess everybody compared to you is a midget, so you can say that, but not many other people
Short
can.
jokes all day.
Let's talk about, I know you talked about that with Pim, let's talk about Clearwire here, because that's the other factor in the
Well, that's a stalking horse here, interestingly, because, Clearwire is a company that just doesn't have the resources to get off the ground. A lot of people look at this company to say they're not getting to enough markets fast enough. 4G rollouts are happening from other carriers. With a different technology, though, SoftBank looks at Clearwire as a familiar technology because it's quite similar to what's used in LTE in Japan. Well, Sprint, of course, owns 48% of Clearwire's equity, not their debt, but their equity, and that's important here if Clearwire can stay afloat, because debt is not senior to equity at that point. As long as there is equity. They're in 88 markets already, albeit in a small way. They've got 11 million subscribers already, albeit 9.6 million of those as wholesale clients. But Clearwire could allow a way for SoftBank to come into the U.S. market in a very much differentiated offering with a different technology than is available from other U.S. carriers.
What technology? What about the technology?
It's specifically an LTE technology that allows for Wi-Fi, wireless Wi-Fi of a high speed that some say is faster than any kind of 4G that's out there right now offered by the U.S. carriers. And again, one that is not unfamiliar to Japanese companies.
We've been covering Huawei and the congressional concerns all week with ZTE and Huawei. Could any of these congressional concerns inhibit SoftBank's potential look at this?
Well, if it gets to a point where there's an acquisition, after an acquisition, there could be issues because a newly reinvigorated and cashed up Sprint could do acquisitions, and at that point there might be antitrust concerns. But the concerns of foreign ownership of a wireless network, we've kind of gone through that already when we watched the acquisition of Vodafone by Deutsche Telekom and what ultimately became T-Mobile here in this country. So the German ownership didn't seem to be a problem for the Justice Department, and probably wouldn't be a problem for Japanese ownership, likely the same issues at hand.